Hi, I'm Aditya Arundhati ji. It is an honor to have you. I have some very simple questions on banking and finance for you because that is your domain.
Sure,
So,
thank
are you
you.
ready?
Yeah, of course.
Okay.
Please go ahead.
So, my first question is on investing. So, given the array of investing options that are available now as compared to what we had 25 years ago, what is the future of fixed deposit according to you and why?
So, fixed deposits are basically instruments where you keep money that you may suddenly need. The kind of liquidity that a fixed deposit has, it's difficult to get the same kind of liquidity anywhere else. See, what happens is if you put money in the mutual funds, you can also get it in 1 day's notice. But if the markets are bad, the amount that you'll realize for that mutual fund may be well below what you invested in it. In respect of a fixed deposit, that downside risk is capped. So if you put 1000 rupees in a fixed deposit, you will at least get back 1000 rupees. In a mutual fund, you may get back 800 rupees. Okay. So therefore, why do we use fixed deposits? We use fixed deposits to keep the money which you necessarily will need as a liquidity cushion should you have any sudden requirement. So you're not going to put all your money in the fixed deposit. Those that you can afford to keep for a longer term, you will put them in the market. But those that you need suddenly, you need to put it in the bank and put it in a fixed deposit because you know for sure that you can get hold of the money at the earliest possible within the day and you will get the money which you invested. Okay, there will not be any cutbacks on the principal sum. That at least is safe. So fixed deposits will always remain. It's not that they will disappear, but the amount that you put in the fixed deposit out of your entire corpus, that will slowly shrink. Earlier, people used to do that because the risk appetite was very low. They didn't want to, lose the capital. Today's generation has a much bigger risk appetite. Therefore, they can afford to put it in the market. But some amount of their money will always be in fixed deposits.
Wow, thank you. So, my next question is on SMEs and MSMEs. So, according to you, what are the main reasons why SMEs and MSMEs struggle to repay their loans on time?
So, the SMEs and MSMEs, basically what happens is there are 2 or 3 things that we have to be careful when setting up a business. The first thing is, what is your financing structure? How much of it is equity and how much of it is debt? What is equity? Equity is your own money. What is debt? Debt is what you take as a loan from a bank or from anybody else. Now, what is the difference? The difference is equity is patient money. It can wait for its returns. Because it's your own money, you don't need the return on a monthly basis. Debt, on the other hand, it's like a taxi meter. Once you put it down, it will keep rolling. Okay, so you have to make payment of it on a regular basis. Now, if you have too much of debt and very little of equity, that means there is a very large debt obligation. So if you hit a downturn when your business is not doing well, you will not be able to repay the debt, and the people who have given you the debt, they will call it up, meaning they will take away the liquidity from your business and your business will go under. So that's the first thing, that the financial structuring of your business has to be such that it can withstand downturns. And in a business, anything that can go wrong will go wrong. You have to start on that premise. Okay? Not everything is going to go your way. That's one thing. The second thing in a business why MSMEs and SMEs suffer is often they don't have the market linkages, meaning they don't know where to source their raw materials, etc. from at an economic cost. And secondly, they don't know the markets that they need to sell to. And even if they know them, they don't have the linkages to be able to really control where the market is going and how it is going. Okay. So because that's why, you have what are called these farmer producer organizations. Farmers on their own, when they tried to source, say, fertilizers, they found they were being charged in exorbitant prices. Now, if a producer organization grows that represents 200 farmers, you aggregate the demand, you're buying then in bulk, you will get it at a far lesser price. Okay? So the economics of scale works. Similarly, when you are putting it out in the market, selling something in the market, if you can sell in bulk, then you can control the pricing in the market. If you're a very small bit player, they can squeeze you and take the product away at very little margin. So that is where the SMEs and the MSMEs, they suffer. Okay. First of all, the capital structure is not right. Second of all, the linkages are not perfectly done. And last but not least, I will say, is the human talent. End of the day, a business is made up of the people that run the business. The people who are running the business, do they understand the business well? Do they have the passion for the business? Passion for that business is very important. And last but not least, can they afford the right kind of manpower to run that business? If you have these three pieces right, mostly these units will not only survive, they will thrive. But if you have one of them wrong, very often it's very difficult to save that organization.
Wow. So you have been observing the credit market growth of SMEs and MSMEs in the last decade or so. How has it changed?
It's changed in the sense that many more people are now venturing into these areas. Again, as I said, as India matures, the risk profile of our population is changing. People in my generation, we had to support a generation above us and a generation below us. But today's children, if you see, they only have the responsibility of managing themselves. Sometimes not even that, because their parents are still working. They are still supported by their parents. So their risk profile has gone up. They are able to take more risks. And as you are able to take more risks, you are able to strike out on your own. When I was just coming to an age when I needed to start earning, I looked for jobs because I didn't have anybody to give me the capital in order to start a business. Nor did I have the confidence to do it because not many people around me were doing it and thriving. Today, the situation is very, very different. Many more youngsters are able to take the risk of trying out a business, of striking out on their own, because there are many more opportunities. They are able to take a risk for a longer period of time, and they're able to get together the right kind of talent of people to come together in order to form those businesses. So I think, today MSMEs and SMEs are really the backbone of India. They are the ones that are creating the maximum number of jobs. I think the future for them is very bright.
Wow. And my last question, and this is on artificial intelligence. As you would agree, the competitive advantage that bigger companies have against SMEs and MSMEs is much higher. And SMEs and MSMEs, the scale of operation and their funding reserves are not as much. Do you believe that artificial intelligence will have an adverse impact on the growth of the SME and MSME sector?
So, artificial intelligence at this point of time is a very costly proposition, right? And it's not even as though smaller countries can also afford it. Because if you look at it, the main chips are being made by one company and they are literally rationing it out. But like all of the electronics goods, these things will become cheaper. At one point of time, if you remember, a computer used to cost a huge amount of money, the supercomputers. Today, the power of a supercomputer is available on a mobile. Okay? The computing power. So to that extent, these things also at some point of time will become cheaper, will become affordable. Artificial intelligence is not something that's going to come and totally disrupt everything today. It will happen over a period of time. And SMEs and MSMEs, even today, they are into more labor-intensive products. Okay. So while artificial intelligence will make things easier to understand on account of the insights they give into customer behavior, etc., because the SMEs, MSMEs are looking at smaller markets, those kinds of behavioral insights are not really absolutely the need of the hour today. For instance, a large organization, say an organization like the one that I was in, SBI. SBI must be getting something like 100,000 emails every day, okay, which need to be answered. Now, obviously, with 100,000 emails, you need a lot of manpower to, acknowledge them, resolve them. If you have artificial intelligence, it will be able to do it better. An SME or a MSME, how many emails do they receive per day? Far less. So I don't think it's going to make a huge difference right now. Some point of time, yes, when things become much more different, maybe more advanced, but by that time, these things will also become cheaper.
Okay.
So at this point, even for large organizations, mind you, they are thinking that if this is the problem, and if I increase my workforce by 10 people, instead of buying the artificial intelligence licenses, which are so costly, probably throwing people at it is simpler than throwing artificial intelligence at it. Even large organizations have this, dilemma. So it's not that AI is the panacea of all things and is going to wipe everybody out. That's not going to happen. Okay? And whatever happens going forward in the future, these things will become much more accessible for everybody. It will become cheaper. It will become more usable. It will become more user-friendly. So the future will reveal itself. But in the meanwhile, I think we should just try and do what we are doing right now to the best of our ability. And if we continue to do that, I still think the future is secure.
Very nice. Very nice. Amazing answer. Thanks a lot.
Thank you.
Thank you.